Everybody feeling good? Make it in here today? All right, so let's just start with some quick introductions. I'm Tom Murphy, head of communications at Securitize. I'm joined here by Saeed, Badreg from Wormhole Labs, and of course, Michael Sonnenshein from Securitize. Guys, Saeed, let's start with you. Just a real quick introduction of what you do and what you do at Wormhole specifically as well.
Hey everyone, I'm Saeed. I'm CEO of Wormhole Labs. Basically, we build software, we open source it, and we let the ecosystem kind of build products and applications to take their assets and their data cross-chain.
And Michael, how about you? Obviously, a lot of action at Securitize right now.
Indeed. So I'm Michael Sonnenshein. I'm the Chief Operating Officer at Securitize. We are the largest tokenization platform in the space. We've brought about $4 billion of tokenized securities onto public blockchains like Solana and others, and very excited for this chat.
So Saeed, let's start with you real quick. Obviously, there's a ton of excitement and anticipation in this building right now. What are some of the most exciting high-level things that Wormhole is looking at the moment?
I think some of the stuff that's exciting us the most is we've built a lot of the core infrastructure that has allowed for a bunch of assets and data to come into the Solana ecosystem. And a lot of that open source work, people have taken and built applications that we never thought were possible. A lot of those applications have been really smart teams that are solving very intelligent pain points that on-chain users are having. But now we're starting to see institutions come in and leverage the technology to solve major problems in TradFi that we never thought would happen at this stage. And so for us, it's like we are working with a lot of the partners that not only are they institutions trying to serve institutions, they're also institutions that you never thought would actually serve retail. So there's a lot of things that I didn't think would happen this fast, this quickly. And I think this conference is aptly named Accelerate because we are seeing a massive acceleration in things that we thought would take 5-10 years. And it's happening month over month at a rapid pace.
And Michael, Saeed just mentioned it, right? The name of the conference is Accelerate. I'm not sure there's a space that's accelerating as fast as tokenization and what we're doing at Securitize. Why is there so much momentum and so much excitement right now?
Yeah, well, when I think about even just the last year alone in terms of the tokenized security space and RWAs in general, the space has more than doubled in size. And if you look within that, you'll see that areas like tokenized treasuries have grown probably now over 800% in the same time period. And so one of the things that I think we're really focused on at Securitize is ensuring that when we are going to bring investments on chain, we're going to unlock or find some additional benefits for both the asset issuers, like Nick mentioned, Apollo, Van Eck, BlackRock, even Hamilton Lane, as well as for the end investor itself. A lot of the investors that are coming on chain today to buy products like these are investors that for the most part are already in the digital asset ecosystem. They're already folks that may have speculated on assets like Bitcoin, Ethereum, Solana, and they're looking for diversification with top-tier asset issuers and often with cash-flowing investments. But if you compare the attributes that these products have in an on-chain environment to their traditional counterparts, we hold ourselves accountable and responsible to give them some other features. So for example, in Solana, as well as other chains, our BlackRock tokenized treasury fund, the dividends are paid out on a daily basis to investors, as opposed to in a traditional Rails environment, those dividends get paid monthly, quarterly, et cetera. So when you think about the compounding effects that has for the end investor, when you think about their immediate access to the capital, these are objectively attributes and features that investors are now looking for and are really starting to demand out of their on-chain investments. I think when you also think about not just the investments themselves, but the other opportunities that exist for them because they're on-chain, we're starting to see a lot of interoperability, not just cross-chain working with partners like Wormhole, but also being able to bring these investments into the DeFi ecosystem. So largely, these pools of capital and these types of investments have never really had the opportunity in a traditional format to exist with lending and borrowing and all the great things that investors can do in DeFi. But now with the advent advent of folks like Camino and Drift and the Solana ecosystem, if you are minting these assets on chain, you're often able to now bring them into the DeFi ecosystem to either leverage the assets further or come up with other strategies that ultimately enhance the yields for investors. And a lot of that demand is really what's driving the growth of the space in general.
Saeed, how does Wormhole facilitate a lot of this growth? And then on a higher level, what's your relationship with Solana, and how do you guys really try to work together?
I think a lot of it has to do with giving the end user or the asset issuer the ability to make the trade-offs that they want to make. So you kind of want to have an extremely flexible stack that if an asset issuer wants to be native on Solana, like BlackRock, for instance, they can do that, but they don't have to sacrifice their growth. So if there are other trade-offs that users or institutions are making and they want to be on other chains, that can happen without having a complex amount of work and operational overhead to be able to manage the asset. So it can be native on both chains. It can communicate with each other. You have all of that infrastructure set. So if at any point a Securitize user who has BlackRock on one chain, like the BITO token on one chain and wants to move it to another, they can do that in a purely native fashion. And I think that's been something that we've helped with a lot of institutions support. And it's particularly important when you start to talk about payments and you start to talk about stablecoin issuers, and intrinsic to the work that they're doing is that we want this to proliferate. We don't know where the merchants are going to be. We don't know where the asset issuers are going to be. And we don't know what the payments networks are going to allow. But what we do know is that we don't want any limitations in terms of a blockchain, in terms of the type of asset stored, in terms of the type of wrapping of that asset. All of that needs to be abstracted away, and that's a lot of the work that we've done. And I think we've had a decent amount of success attracting some of the biggest names in the world to start using those rails and start issuing their assets across multiple chains.
Michael, I think one of the real buzz phrases right now is we want to tokenize everything, and everything and their mother needs to be tokenized. But I don't think we always think that that's the case, right? So what are some of the misnomers around tokenization, or some of the myths that you're seeing out there?
Yeah, I mean, I think one of the biggest ones that we're having a battle at the moment is that there's this inherent belief that if you tokenize something, it immediately makes the asset itself more liquid. That's just simply not true. Liquidity and the ability for an asset to be bought and sold, or there to be price discovery or a marketplace, the same dynamics exist for it in a traditional rail environment or in an on-chain environment. So simply tokenizing something does not inherently make it more liquid. What I would say in terms of what we're doing at Securitize and the types of opportunities that we're seeing from asset issuers, trying to satisfy the demand that the on-chain investor is looking for really surrounds investments that are highly liquid, and more than anything are assets that again, have the most frequent ability to be bought and sold, redeemed, purchased, but also cash flowing. And so that's why I think we've seen the growth we have around both tokenized treasuries. You've seen the growth around now private credit. And what will be exciting for us as we kind of enter into the back part of this year is the demand is starting to shift both in terms of the product structure itself, like what type of product wrapper is moving into the tokenized format, as well as what the underlying exposures are. So one of the projects I know we're proud of is we tokenized Exodus, a public company traded on the New York Stock Exchange. So there's obviously a lot of buzz now around being able to tokenize equities, ETFs, et cetera. And as more investors come into the on-chain environment, you're going to see a broader spectrum of product exposures and product wrappers.
So obviously we're here in New York City. The color scheme of Accelerate is red, white, and blue. Saeed, you actually just told us backstage, I hope I'm not putting you on the spot here, that you guys just opened up an office in New York City. What is it about the enthusiasm, specifically here in America, that has the entire crypto world feeling pretty patriotic at the moment?
Yeah, I think there's a tremendous amount of talent in this city and in this country, and I think a lot of it has had to move elsewhere because of a lot of stuff that's happened in the past. I think a lot of the excitement and acceleration and why you want to continue to invest here is really around the new administrative changes and their views around stablecoins, their views around crypto, their views around regulation and bring clarity. I mean, it seems like the administration has a view that there's an insane or an immense untapped demand for digital dollars, and they think that that is core to their strategy for addressing inflation, addressing some of the major economic forces that kind of concern the government, concern the Fed, concern the Treasury. And so when you see the Treasury Secretary out there really pushing stablecoin adoption, you see the Senate passing the Genius Act, I don't think it's happening in a vacuum, and I don't think it's just because like, oh, we just decided we like stablecoins. I think there's like a very, very intelligent strategy in terms of, we've seen things like Tether, who really have a very niche market in terms of servicing like crypto traders on exchanges mainly, and a little bit of payments in certain geographical locations, become a top 10 buyer of US Treasuries in a very short amount of time with very little support. And I think that's a very, very powerful signal for regulators and lawmakers in this country and business people in this country that there is an insane untapped amount of demand for these digital dollars. And so we should just open the door wide open, set some very clear guidelines, some rules of the road. If you want to launch a stablecoin, you can do it. You can do it right here in America, and you can go and try to service that demand wherever it is around the world. And in order for you to actually do that, you need to have trustless systems that are based on decentralization. You need to have instant settlement. You need to actually provide a better product. And you need to provide transparency, and you need to open up the market to the entire world to interact with it. I think if you look at this past week, we had a treasury auction that was very interesting. A lot of eyebrows were raised. So yeah, I would say like, when you see those two things coupled together, it gives you a strong sense of a trend, of a signal, and it's worth investing in. And I think there's a lot of talent in this city and in this country that sees the same thing and is starting to build products and infrastructure that can support that.
And actually, just when you talk about transparency, I think that's a really important theme, because investors are looking for that transparency. One of the things that's been enabled by the rise of tokenized treasuries is these products are actually starting to make their way into being the reserve assets for a lot of the stable coins that are launching. So that's certainly true in the case of the BlackRock product that we offer, BUIDL, as well as a more recently launched product that we did with VanEck, VBIL. And so investors are looking for that on-chain transparency of what these stable coins are invested in. But I also think that the tokenized treasury space is starting to actually challenge the role that stable coins have historically played. And so over time, you're going to begin to see tokenized treasuries begin to be accepted by market makers, OTC desks, and even exchanges because of the high quality collateral that they represent. And also the fact that if traders or even just investors generally want to represent their interests in any of these environments, of course they'd rather do it with a yield-bearing, cash-flowing asset than perhaps a stable asset. And so I think we're starting to see and kind of being on the precipice of some real changes in investor behavior in the on-chain environment because of the introduction of these products.
Last question for you guys. Obviously everything's accelerating. I think everybody's really excited about the space right now, but let's look ahead. What is something you're looking for? What's something that you're watching for over the next 6 months, the next year, the next 5 years that's going to be really exciting and take the space even further?
Yeah, I mean, I think for us, it's definitely the real-world assets coming on chain, and then just being used in a bunch of different ways that are now only possible because of investments that are like Jump Fire Dancer for Solana. Like these ecosystems that are really putting an insane amount of investment and technical engineering to make their blockchains better and more performant, and can support this world where you do have a mass proliferation of stablecoins, and you do have the global payments network starting to adopt crypto to service their users. Like all of these things are possible. All of these things, like the market is clearly telling you, we want this, give us this. The question is, are we going to be able to build the right infrastructure to be able to support it? I think that's what a lot of people here are thinking about. That's what we're certainly thinking about, and what we're most excited about.
I think I'm really looking for convergence. I'm looking for what we have available to investors today in their brokerage accounts, retirement accounts, investment accounts, and what's available today in their wallets. And I'm seeing those two worlds converging over the coming months and coming years. I would venture to guess what's available in your brokerage account is going to sooner become available in your wallet than the other way around. And so that's why I think the excitement, the enthusiasm, the acceleration we're seeing around tokenization is just so exciting.
Michael Sonnenshein, Securitize, Saeed Badreg with Wormhole Labs. Thank you all for taking your time today. We really appreciate it.